$46.7 billion in quarterly revenue. Let that sink in for a second. Nvidia just dropped their Q2 earnings, and honestly, these numbers are getting so ridiculous that my brain can't even process them anymore. We're talking about 56% year-over-year growth when they're already at a scale that most companies can only dream of. And Jensen Huang, he's out there talking about Blackwell like it's the second coming of computing, calling it the AI platform the world has been waiting for. The crazy part is he might actually be right. So let's dig into what actually happened here, because behind these massive headline numbers, there's some really interesting stuff going on. First off, data center revenue hit $41.1 billion. That's basically 88% of their total revenue coming just from selling AI chips to companies building the infrastructure for this whole artificial intelligence revolution. What's wild is that Blackwell, their newest architecture, is already showing 17% sequential growth. Sequential. Not year over year, but quarter to quarter. That tells you everything about the demand for these next-gen chips. Companies aren't waiting around. They're grabbing whatever allocation they can get because they know if they don't, their competitors will. The AI arms race is real, and Nvidia is basically the only arms dealer in town that has what everyone needs. Actually, scratch that. AMD and others are trying, but when you look at these numbers, it's clear who's winning this battle. Jensen mentioned that Blackwell Ultra production is ramping at full speed with extraordinary demand, which in CEO speak basically means we can't make these things fast enough. Think about that. A company doing almost $50 billion in quarterly revenue still can't meet demand. That's not a bad problem to have. Now here's something interesting that most people probably glossed over. Zero H20 sales to China this quarter. For context, H20 was Nvidia's attempt to create a China-compliant chip that wouldn't violate U.S. export restrictions. But get this, they actually benefited from releasing $180 million of previously reserved H20 inventory and sold $650 million worth to customers outside China. So basically, they took chips designed for China, couldn't sell them there because of regulations, and somehow still made money by finding other buyers. That's some next-level pivoting right there. The fact that they're guiding Q3 to $54 billion without assuming any H20 shipments to China tells you they've completely written off that market for now and are still crushing it. That's insane resilience for losing access to what should be one of their biggest markets. Gaming is having its own moment too. $4.3 billion in revenue, up 49% year over year. The RTX 5060 launch was apparently Nvidia's fastest ramping X60 class GPU ever. Which makes sense when you think about it. These aren't the flagship cards that cost $2,000. These are the ones regular people actually buy. And with DLSS 4 now and over 175 games, they're basically making it impossible to consider anything else if you're a serious gamer. Actually, what's really clever here is how they're using gaming as a Trojan horse for AI. Every RTX card is essentially a mini AI processor sitting in millions of homes. Today it's running DLSS to make your games look better. Tomorrow it could be running local AI models, doing video editing with AI enhancement, who knows what else. They mentioned partnering with OpenAI to optimize models for RTX GPUs. Imagine running ChatGPT level AI completely offline on your gaming PC. That's the future they're building toward. The guidance for quarter 3 is where things get really interesting. They're calling for $54 billion in revenue, plus or minus 2%. First of all, the fact that their margin of error is bigger than most companies' entire annual revenue is hilarious. But more importantly, they're expecting gross margins of 73.5%. 73.5%. Do you understand how insane that is for a hardware company? Apple, which everyone considers the master of margins, typically runs around 40 to 45%. Nvidia is almost doubling that, and they're saying they'll exit the year with margins in the mid-70s. This isn't just pricing power. This is, we have something nobody else can make and everyone desperately needs: power. When you're the only company that can deliver the tools for the the AI revolution, you get to basically name your price. What really caught my attention was the share buyback announcement. They added another $60 billion to their authorization. That's on top of already returning $24.3 billion to shareholders in just the first half of the fiscal year. They're generating so much cash, they literally don't know what to do with it all. Most companies would be aggressively expanding, building factories, acquiring competitors. Nvidia, they're just like, here, take some of this money back. We've got too much. It's a good problem to have, but it also shows they're confident about their competitive position. They don't need to make defensive acquisitions or panic build capacity because they know nobody's catching up anytime soon. The moat around their business isn't just the chips, it's CUDA, it's the software ecosystem, it's the years of relationships with every major AI player. Looking at some of the partnerships they announced, Disney, Foxconn, Hyundai, Eli Lilly, this isn't just tech companies anymore. Every single industry is trying to figure out how to use AI, and they all need Nvidia's chips to do it. The automotive segment alone did $586 million, up 69% year over year. They're shipping Drive Thor SoCs, launching Jetson Thor for robotic. Basically, anywhere AI touches the physical world, Nvidia wants to be there. They even mentioned working with European nations, France, Germany, Italy, Spain, the UK, to build Blackwell AI infrastructure. They're creating the world's first industrial AI cloud for European manufacturers. That's not just selling chips, that's becoming the backbone of entire nations' AI strategies. The technical achievements they're bragging about are pretty wild too. They said OpenAI's GPT-OSS 120B model can hit 1.5 million tokens per second on a single Blackwell GB 200 NVL72 system. For context, that's like processing an entire novel in less than a second. They introduced something called NVFP4, a 4-bit format for training large language models, which basically means they're finding ways to make AI training even more efficient. Oh, and Blackwell apparently crushed every single ML-perf training benchmark. That's like winning every event at the Olympics of AI hardware. When your competition can't even get on the podium, that's dominance. And here's the kicker. They still can't meet demand. Even with all this revenue, all this growth, Jensen flat out says demand is extraordinary. We're potentially still in the early innings of this AI build-out. Think about it. Every earnings call from every major tech company mentions AI investment. Microsoft, Google, Meta, Amazon, they're all racing to build the most powerful AI, and Nvidia is selling pickaxes to all of them simultaneously. The capital expenditure cycle we're in right now could last for years as companies build out the infrastructure for whatever comes after ChatGPT and current AI models. This isn't financial advice, just me marveling at these absolutely bonkers numbers and what they mean for the AI industry. But man, when a company is doing nearly $50 billion quarterly, growing 56% year over year with 73% margins and still can't meet demand? That's not just a successful company. That's a once-in-a-generation business riding a transformational technology wave. The next few quarters are going to be absolutely fascinating to watch.